The stock of Nike. Is it going for a bargain? And when is the right time to buy? This is what we're going to look into in today's recording. Now, when it comes to brand names, we all tend to have our favorites we are loyal to. I personally prefer Adidas. However, it is crucial to separate the consumer in us from the investor in us. We don't want to just spend money. We also want to be savvy enough to know when is the best time to buy the stock of some of these well-known brands. And unlike having attachments to brands we wear, we want to have a more neutral approach to stocks we buy. Attachments in investing will regularly have you buying bad stocks, which will have a detrimental impact on the growth of your hard-earned money. Instead, you want a simple approach that helps you to identify the best stocks to have in your portfolio regardless of brand name. And that is a very important point to grasp, and which we're going to go into in more detail in today's recording. My name is Zahir Anwari and I'm a co-founder of SublimeTrading.io. If this video helps you to up your investment game, do like, subscribe and hit the bell notification. And don't be greedy guys, share it with those who need to watch this. We have helped hundreds of private investors over the past 10 plus years profit from trends in the market using our simple to learn methodology. I also write for a number of publications including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stock's performance, focusing on the next 3 to 5 years. Now, when it comes to investing, we need to reverse the consumer logic of giving our money to our preferred brand names, and instead we want these brands to pay us. And the best way to do that is by having an analysis process that identifies which brands over the next 12 to 24 months have the best setup to do that. And once again, regardless of which brand name that is. So we want to look for the best stocks that have the highest chance of giving us profit. So let's say if you do prefer wearing Nike, but right now the stock of Adidas is looking far better, then the investor in you will buy Adidas regardless of your attachments to Nike. The goal, remember guys, is profit and not to be right. If you focus on profit, you choose the appropriate stocks. If your goal is to be right, then this is where ego comes in before profit, and how so many end up with poorly performing portfolios. Okay, so before we look at the chart on Nike, a brief background. The company was founded on January 25th, 1964 as Blue Ribbon Sports by Bill Bauman and Phil Knight, and officially became Nike Inc. on May 30th, 1971. The company takes its name from Nike, the Greek goddess of victory. Their mission statement is interesting: to bring inspiration and innovation to every athlete in the world. If you have a body, you are an athlete. It is the world's largest supplier of athletic shoes and apparel, and a major manufacturer of sports equipment with revenue in excess of $37 billion. It employs around 77,000 people worldwide. The brand alone is valued in excess of $32 billion. Making it the most valuable brand amongst sports businesses. They are pioneers when it comes to partnerships with athletes, starting with Michael Jordan, and that has led to partnerships with Cristiano Ronaldo, CR7, which you'll be familiar with, LeBron James, Tiger Woods, and many, many more. So on paper, the company is a giant and it looks solid, but does the stock's performance reflect this? This is what we have to establish as investors, putting the consumer in us to one side. You see, the fundamentals of a company may be solid, but that doesn't mean the stock performance is, and hence again why it's important to not have attachments when it comes to buying a stock. So let's switch over to the charts and look at the stock of Nike in more detail. Okay, so this is a typical 3-screen setup of mine. In the top right, I have the monthly time frame. In the top left, I have the weekly time frame, and down here across the bottom we have the daily time frame. Now I like to look at the higher time frames when I do my analysis because it gives me a very clear picture of how the stock has performed in the past, and that will give us an indicator of how the stock is likely to perform in the future. It gives us a very clear indication of what the stock is doing right now, and also it's where we do far less work to make a lot more profit when it comes to actually executing a strategy. So it's a smart move to move your analysis onto the higher time frames. If you're stuck on the lower time frames and wondering why you aren't getting any consistency, it's because you're day trading, and day trading is notoriously difficult, and really and truly it doesn't work. Move your analysis onto the higher time frames and also execute your strategies on the higher time frames. So let's start on the monthly, then go down to the weekly, and then go down to the daily, and let's establish what this stock is doing and when would be the right time to potentially get in. Okay, so if we look at the history of Nike, it's a solid stock. We can see that Nike has performed very, very well. I mean, if we go back in time, going back to even the early 90s, we can see that the stock went from $1 to around $10. Then it went through this area of consolidation, and then it went on its run from around here, which is around $10 to just short of $20, went through another correction, came back down to the $10 mark, and that's really when it started taking off. It went from $10 in 2009 to around $70 in 2015, went through another correction, and then went on this next run to just short of $180, and that's currently its all-time high from November of last year. And since then, it's been in a decline, and it has fallen around 38% since its all-time high, currently sat at around $110. Now, if we look at this in more detail, what's important to understand is that price is trading below its low of last year. So that's the calendar year of 2021. Current price action is trading below the low of last year. For us to really start considering buying into this stock, we want to see price move above this marker. Once price moves above this marker, then there's a much higher chance for it to start pushing towards its all-time high. Now, certainly if it breaks above its all-time high, that will be a classic environment to get in. Now, people tend to panic when stocks start printing new highs, but the reality is when a stock prints new highs, it goes on further to print further new highs and trends very, very well. When you start looking to buy into stocks at these sort of bargain levels, it has to do a lot more work to get to its all-time high. There's no guarantee that if you get in at this level that it'll suddenly start shooting up. We can see that it has a history of going sideways. So for example, if we look at this point here, 2015, that's December 2015, and then eventually broke out in May of 2018. So you're looking at a 2.5 year period of consolidation before the market then went on this run. If we can ignore the impact of COVID-19, there was a decline which was quickly absorbed into the market and went on this run. So the same thing could happen here. You could buy in at these low prices, but the market could go sideways for many months to years before it actually starts moving to the upside. So you have to look at this in an objective way. Yes, it's a stock of Nike. Yes, you may like the brand, but the stock itself is currently at a level where price may even potentially weaken further. If we go to the weekly time frame, now the weekly time frame is at an interesting point. I've looked at this in previous videos, particularly on Bitcoin, where I mentioned that when price comes to around the 200 simple moving average, which is this black line, it gives us the average of price over the last 200 weeks. The stock can find an area of support and then bounce back off it. It did that around Corona, and then it went on this run. This decline has taken price back to around this area. It's broken through it and is now just trading just above that $100 round number. Now, the $100 round number is also a significant level because price can come to this level, find an area of comfort, and then bounce back to the upside. So price is at a strong level of support. This is a support zone made up of the 200 simple moving average and the $100 round number. Now, these aren't hard levels. Price doesn't always hit these levels pin perfect and then bounce off it. What it tends to do is find an area of support, which is what it's doing, bounce around this area, and then it could potentially move back to the upside. Of course, if it breaks through that $100 round number, then we could see further weakness. And on the daily time frame, now the daily time frame paints an interesting picture because price action is below the 200 moving average, which is the black line, the 50 simple moving average, the orange line, and the 20 simple moving average, which is the blue line. If we look at the end of last week, Thursday and Friday, we had bullish action. Our trend filter has turned grey, suggesting that we are in some sort of sideways market. What we're looking for is this momentum to gather speed, push up to the 200 moving average, and ideally break above the 200 moving average. If it breaks above the 200 moving average, then we have a bullish bias and we could potentially start looking to buy into this stock. If you want to be aggressive, you can get in above the 200 moving average. If you want to be more conservative, which is what we tend to do here at Sublime Trading, is we can wait for the stock to start printing new all-time highs. Now remember, as mentioned before, what we want is profit. We don't want to be right. So while the stock of Nike is looking to gather momentum and to set up correctly, there are a ton of other stocks in other sectors that have already set up and could already be performing well and printing new all-time highs. So this is really the aim as an investor is to look across the board and look at which stocks, regardless of brand name, regardless of sector, have set up the best, have the best history of performance, and have the highest chance of returning us a profit. Nike right now just does not meet that criteria for all the reasons we have just gone through. It's displaying a mixture of bullish and bearish factors, and for that reason we are not in a high probability environment. And for us right now, we really personally here at Sublime Trading, we want to be standing aside. And as already mentioned, the earliest we will really consider buying Nike is when it moves above the 200 simple moving average on the daily time frame. Once it's done that, we can then potentially look at buying into Nike. Now, just to give you a comparison of what is a good stock compared to Nike, if I just switch over to FCN, ticker symbol FCN, FTI Consulting. Let's start with the monthly time frame. Now, if you look at the monthly time frame, we can see that stock is already printing new highs. So a stock that's printing new highs has a very high chance of continuing to the upside. Now, you may not be familiar with this stock, you may not have heard it before, but that doesn't matter. This is where analysis comes in, and this is where scanners come in, and this is where you want to be able to pick out the best stocks that have the highest chance of returning your profit, even if you don't know much about the company. What we do know, looking at the chart, is that it has a history of performance. It's printing new highs. If we compare that to Nike, Nike has declined. Whereas if we look at FCN, it's actually moving in the right direction. On the weekly time frame, it's above the 200 and the 50 simple moving averages. Our trend filter is green, confirming that we have a bullish trend in play. Once again, if we compare that to Nike, Nike has declined since last year, whereas FCN is printing new highs. And then if we go to the daily time frame, price is above all three moving averages. The trend filter is green. It's moving to the upside. There's good momentum gathering. I mean, in recent days, this stock has moved up. Let me just move it out of the way. This stock has moved up 10%. Whereas if we compare that to Nike, Nike has been declining. So there you have it, guys. There's a really good example. I'll just go back to that chart. FCN, a very, very good example of a stock that you should consider having in your portfolio compared to Nike. Nike may be one of your favorite brands, but the stock right now is not worth considering until the right setup has materialized. Okay, guys, I hope you enjoyed that. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Go down into the description below. Click on the link. The link will open up to this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard by clicking on this button. It will take you less than 2 minutes to complete. At the end of the scorecard, you get a report detailing your current performance and the steps that you will need to take going forward to improve your performance. And in addition to that, guys, you will get 30 days free access to the Hot Stocks Vault. This is where we share with you the top 10 performing stocks of the week, including a host of other goodies. So once again, go down into the description, click the link, take the scorecard, come through to the Hot Stocks Vault, and I will see you in the next recording.